What's going on, traders? Trader Joe back again with a quick video, hopefully to help you become a better trader, right? Short, sweet, simple. Let's get into the video. So really quick, actually, let me show you my Instagram if you guys want to go follow me. This is where you guys can reach out to me if you want private one-on-one coaching. If you just want to ask me any questions about trading, I'm here to help you guys out. Trader.joe.profit. And, I have a bunch of live trades on here you guys can go through. What the strategy I'm going to show you on this video is basically the same strategy I use in all of these live trades that I show on my Instagram. And these are all the same screenshots of trades that I post real time before they happen, and then I just manage them. You can see the candles are live. Well, obviously they're screenshots, but they have seconds. But just go through all of those trades, and I have a few live trades in here as well. But really go through and kind of study the setups that I'm gonna show you in these trades. This is on Trade Locker, awesome platform. But yeah, whole bunch of trades there that you guys can go look at. So let me explain to you the simplicity of this strategy. And again, a strategy doesn't matter if you don't stick to it. It'll never matter. If you're going from breakouts to retests to break of a trend, or trying to trade reversals, or trying to trade EMAs only, you're going to have a tough time because you just have to have the same strategy that you're comfortable with and stick with it. And that was a difficult thing for me because I would always jump from strategy to strategy. You can understand the same problem that I would have if you've had that, where you jump from strategy to strategy. So now I've kind of trained my brain to, if I look at the chart and I see my setup, that's the setup I'm taking. If I look at the chart, I don't see my setup, and it takes me longer than, I'd say, 5 minutes to find my setup. And I'm like, you start digging, you start looking, you're like, oh, there's no setup, where is it? And then you try to force something that's not even there. That's where the problems start to arise. So I've found that it's comfortable to trust one strategy, and I find that it's comfortable to wake up and look for that strategy. If it's not there, just give it some time to maybe set up, right? You probably get up and look at the charts at, 7:30, 8 a.m., I give it until around 11:30. If I don't see the setup by 11:30, there's no point in me trading, because now I'm just forcing a trade. Right? I'm taking a trade based off of luck, complete sheer luck and gambling, and there's no reason for that. So I'm gonna break it down. The strategy again, it's the same strategy I use that I've used to get funded. How I trade on my live account, how I trade on my my flipping account. Where you can start risking maybe 10% on those trades. Not that you should do that for your full capital. Just do that for fun, maybe on the side, if you feel like wasting your money. But remember, you will probably lose some money. Now, this setup was on gold, and you can find this on almost any pair, any commodity, any indice. It doesn't matter what it is, as long as you find the same style setup. And I'll go through a few more examples. But again, you'll see this time and time again. One thing I'm going to give you as a piece of advice: if you're going to trade anything that is a commodity, an indice, let's just say a futures, like there's people that you can trade futures on the same thing that someone can trade, let's just say, on a Forex platform. Like I use Trade Locker, and I could use lot sizes. If you're familiar with lot sizes, you normally trade that with Forex and currencies. You can do that with gold. You can do that with NAS 100, US 30. Okay, you don't need a futures platform or futures broker to trade the same thing that everybody else trades: US 30, NAS 100, XAU, USD. So these all can be applied to any one of these markets, right? From the click of a button, you just go from either one to either one, and you can start trading the same ones if you go on Trade Locker. With that being said, what we're looking for is some type of momentum to the upside or the downside after New York open, okay? And you might have seen it from several other people who trade online. They tell you only look at 1 hour, only look at a 30-minute candle during New York session. That's what they're referring to. They're referring to just the momentum and price action within market open, waiting for price to decide, hey, we're going to continue this way, but first we're going to maybe knock a few people out of their positions on the way down and then go back up. So either way. But I'm going to tell you the simplicity of this setup right here. This is an A+ setup in my book. So however you want to rate your setups, this would be an A+ setup in my book. What we're looking at here is clearly just a level to the left-hand side on gold. You wake up in the morning, right? It's 7 o'clock in the morning. You wake up. Maybe you're thinking about trading right here, right? This is 7:45 a.m. You're thinking about getting into this entry right here, buying it. And no, I'm waiting for market open, right? I'm waiting for all the U.S. traders to trade exactly what U.S. traders trade. That's gold, that's US 30, that's NAS 100. I'm waiting for that momentum to come into play. Now, you can get away with trading Forex, GBP JPY, GBP USD, USD JPY, all of the currency pairs. You can get away with taking trades up to 9:30 a.m. That's fine. There's momentum. And with gold, yes, but I'm telling you, if you're going to trade something like gold or US 30 or NAS 100, wait for market open. You do not want to be in a position that you think looks great. 9:30 comes along and wipes you out of your position and continues the same exact way. You were just trying to take that trade. So, and it'll happen to you if you're not patient enough for it. Trust me, I've seen it time and time again. So what we're looking at is just a clear level to the left-hand side, right? This is the highest high we've had as London session, pre-New York session starts out, right? So 8 a.m., we haven't broke this high. 8:15 a.m., we haven't broke this high. 8:30 a.m. comes up to touch this high. This is when you might get antsy. You're like, oh, we're going to break above this and let me buy. Well, just wait. What's the big deal? Just wait for price to decide where it wants to go. There's absolutely no rush in it. I couldn't tell you the amount of times. It doesn't matter if the price goes up and never comes back down. Then who cares? You didn't plan on taking a breakout trade and just holding it forever. No, you're supposed to be looking for price to tell you where it's going. Let price come back to knock those people out of those positions, and then you take the better entry. That way you can get quick into profit and you're quick to close the trade and you're done for the day and you move on with life. Right? That's kind of the game plan that you want to have. So if you didn't notice, I'm going to give you a little tip here. You guys can add this indicator on your trading view if you have. I think you can do this with the basic trading view. You might only be able to have one indicator. I have my sessions indicator, and then I have the Lux Algo fair value gap. That just highlights the gaps, the fair value gaps by the candles, and it doesn't matter what time frame you're on. You could be 5 minute, 30 minute, 1 hour, 4 hour. It'll show you those fair value gaps. And it's very good for almost your training wheels, and I have that on just for you guys so you can clearly see what I'm looking at and why I'm looking at it. This candle right here, let's go ahead and take it back to as if we're watching this real time. This candle clearly broke above this level to the left-hand side. Clearly broke past this candle, and closed above. Now, if I saw this, let me go. If I see this, in what universe is it smart to just buy this because I see a candle going up? There's just no reason to. There's no reason to buy any of this. There's no reason. Now there's a reason. We just had a break of structure to the upside. A candle close bullish. That's a lot of momentum. It's not like a small little candle that broke above. No, that's a lot of momentum pushing to the upside on the 15-minute time frame. Could be 30-minute too. Depends on how you want to look at your chart. Closes bullish. Creates a gap in the market. Now here's the hard part for a lot of people. They want to either take this buy. You could have took the breakout. This is another strategy too, right? You're not limited to the strategies that are available to you, but just pick which one you're going to do and stick with it because at plenty of time, price will come up here. You'll go to buy, it'll come up, come right back down, stop you out, and then go back up. So the best plan of attack is to wait for price to come back down, especially after all this momentum to the upside. Okay, don't just get all giddy and jump into the trade. All right. So price comes back down. Well, you saw how it created that gap. That's why this tool is really good. So watch as that candle appears. It appears. A gap in the market will appear. Right there, boom. It gets filled. It goes away. So we still have this gap that needs to get filled. This is a beautiful setup too. The fact that price closed even bearish, it doesn't matter. If price came all the way back down, melted into this range, and just continued back down, I would have really, really little hope that we're going to continue back up. Price closed above. Still, even if it's bearish, it closed above. Now we can expect maybe the next candle to push up, come back down, tap this zone, continue back up for a small little entry. So you can go on the smaller time frame if you want. For now, I'm going to stick with the 15-minute just to make it clear. Price will open, push up. We didn't touch here. Oh, yes, we did. Sorry. We didn't touch here. We touched all the way down here, but we still broke into this gap right here. Never broke below this gap because this was the first gap that really kind of caused that momentum. So normally, I'm going to go to the 5-minute time frame. Normally, most people would wait for it to get touched, and immediately get into the trade. Now, with gold, with a lot of these high volume indices, commodities, cryptocurrencies, forex currencies, whatever you're trading, there's really only one way that you can say, I'm going to get into this trade. It's either it goes into this zone and you buy it, or it goes into the zone and you don't buy it. Right? If you're going to take a trade, the only way to really enter that trade is to get into the trade when price touches that zone. Because no matter what you do, if you see price come down here and you're like, oh, I'm going to wait for a rejection. Maybe on the 1 minute time frame, I'm going to wait for a rejection. And then price starts moving so fast, you may not get filled, right? Your entry may not get triggered, especially if there's a lot of volume. This is a lot of volume. Or you might not get the best entry. So I'm going to break that down for you, how that would look. Let me go ahead and go to the 1 minute. So this is where it was on the 1 minute. Okay. So I see candle come down. Oh, sorry. Hold on. Let me go to the 5 minute. So I see the candle come down here, right? Bearish, flying right down. All right. Touched my zone perfectly. Now, if I just get into this entry right here, right? And your stop loss, I'm going to show you where your stop loss should be. Your stop loss should technically be, look how skinny my entry is. That was cute. Your stop loss should technically be not below the gap, but below the candle before the gap. Okay, so some traders you'll see will do something like this. They'll set their stop loss right at the bottom of this candle, the one with the gap. And then smarter traders will set their stop loss on the candle right before that candle gap, right? So it's one candle, two candles, the second candle is the one with the gap, right? And then there's a third candle that's completely bullish moving up. That's a strategy in and of itself. It's just realistically, it's all supply and demand, support and resistance, gaps. It's all the same crap. So don't confuse yourself. So normally I would set my stop loss here. If you want to get risky and you want to do that, go for it. That's up to you. It's your money. So let's go back down to the lower time frame and let's take a look at when would we really get into this? And then you go down to the 1 minute too if you wanted to. So again, some people would get in as soon as price touches, and this is the same gap, just so you know, I have it marked. Here, I'll mark it a little bit more clear. That way when we go down to the 1 minute time frame, you know that this purple zone is basically the gap on the lower time frame. You can touch, as soon as you touch this gap here, you can get into the trade. Go ahead and get in. Or, I'm getting actually kind of tired of this. I have my risk to reward backwards. Or, you can wait for some type of rejection, which would be this candle right here. Because this candle closed bearish, and I just see this, and I'm getting into the trade, I'd be like, oh, shit. Price is just melting down, and I just got into this trade, and now I'm into drawdown, right? I'm into drawdown. Now we're pushing down even further. You know, this could be where my stop loss was. And then price turns around. I don't want to be that close to getting stopped out. So what I would do is, if you're patient enough, I know it's not easy in real time, but wait for there to be a rejection. Wait for there to be some type of rejection. This candle had a pushed all the way down here and it rejected, closed bullish. Okay, maybe get in there. Or hey, the next candle opened and broke above that one that just closed bullish. All right, well, let me get in there. Doesn't matter. Maybe I can set my stop loss down here now. And remember this. You're not looking for, even though it could be, you're not looking for this. And I know you're going to argue with me probably, oh, it's all about your risk reward. It has to be big. You know, you have to have a 1 to 4, 1 to 3, 1 to 5. No, you don't. First of all, you can aim for a 1.5. That's usually my golden rule right there, is a 1.5 and a 1 to 2. Right? I might close partials out at 1.5 and then take it to 1 to 2. As soon as it gets to 1 to 2, you can close out again, maybe partials, and then let the rest run. But do not, for the love of God, sit here and trade this and just hold this. Right? You have to manage your trade somehow, some way. But again, recap of the strategy. You're really just looking for break of structure, right? One, break of structure. Is price going up or down? Price broke above this level right here. Okay. There's no reason that we're looking for a trade right here. We're waiting for a clear break of structure. It broke to the upside. Clearly, what does that teach you guys? What have you learned in trading? No matter what, the basic is higher high, higher low, higher high, higher low. What is that? It's an uptrend. Okay? We didn't have a higher high here. There's no uptrend yet. Yes, we have higher lows. This was the only higher high that we had, but when we start going into pre-New York session, we had a higher low right here. Once it broke here, created the support. Where was our higher high? We don't have it yet until we create a higher high. When we create that higher high, higher high, higher high, I know it sounds stupid. And then we come back and touch that area where we started to initially push and all the momentum came in. That's where you take your entry. Boom, take it. Get in there, get out. The whole point of waiting for the best entry, waiting for that little gap, waiting for where all the momentum started, is because you are so much more likely to go into profit and be able to close for profit at a very specific level if you're patient enough and be done with the day. The problem people have is getting into that trade, holding it, or even getting to that trade and over risking, and it may turn around and screw you up. This could easily be a losing trade too. But these are high probability setups, and no strategy is 100% win rate. You'll be lucky to get 65 to 70% for the entire month. Now, on the contrary to what most people believe, that's really, really good. Especially if you're aiming for 1 to 1.5 or a 1 to 2, even a 1 to 3. You can get away with doing 1 to 3s with this. I'm just comfortable with 1.5 and 1 to 2s. I manage a trade like that, but trade how you want. Other than that, that's just a quick breakdown on a very simple trading strategy. You can go back test this, mark your levels, right? How you would back test this is mark your levels, wait for price to break above. You can do the same way going down, but there's clearly not a downtrend. Mark your levels, wait for price to break above. And it's the same idea almost right here, right? Price pushed up, broke above this high, price came down, touched an area where we would possibly continue up. This is not a high probability setup. That's why when there is a gap and a continuation and a break of structure in one direction, that is your golden egg in the market. Take with that what you will. Stay blessed, stay safe. If you want to do one-on-one private trainings, hit me up on Instagram. If you have any questions, hit me up. If you want to grab the strategy, click the link in the description. Oh yeah, I forgot. All the links are in the description. So go ahead and click on that if you want to book a call with me. I do have a boot camp available. I'm not really looking to train a lot of people. I have limited time that I want to spend on just coaching. So I'll probably train about 5 people, 10 people max a month. So if you want to be one of those people, sign up. If not, hit me up on Instagram.